Hello and welcome to this episode. In this episode, we will discuss about a case law, and the citation is New Rajdhani Honda versus Commissioner of Income Tax 170 taxman.com 340 Raipur Tribunal. So, friends, what is the agenda of this session? We'll go into facts of the case. We'll examine how this case went up to the tribunal. We will learn about the tribunal's decision and what was the conclusion drawn upon and what are the key takeaways of this case law. The sections involved in this case are Section 148, Income Escaping Assessment, Section 148A, Inquiry before issuing of notice under Section 148, Section 69A, where addition was made to the income of the assessee, and also Section 194C, wherein certain income is received by the assessee on which TDS under Section 194C was deducted. Now, what is the context of this case? Actually, the assessee did not file the return of income, but in fact, there are certain cash deposits in his current account maintained with a bank, and also he has received certain income on which TDS under Section 194C was deducted. Now, going into the facts specific, the assessee maintained an account with ICICI Bank wherein he has made certain cash deposits, and also he has received a certain money from an insurance company on which TDS under Section 194C was deducted. But the assessee did not furnish his return of income for the relevant assessment year. Now, what has happened is notice under Section 148 was issued, but prior to the issue of notice under Section 148, enquiry was conducted by virtue of a Section 148A. Now, the Income Tax Department has received information that the assessee has income from multiple sources. In spite of having income from multiple sources, assessee did not furnish his return of income. The assessing officer was not satisfied with the reply given by the assessee under 148A proceedings. Thereafter, order was passed under 148A and a notice under Section 148 was issued. During the course of assessment proceedings under Section 148, the assessing officer made an addition by virtue of Section 69A for unexplained cash deposits, and the assessment order has been passed under Section 147, read with Section 143. Aggrieved by the assessment order passed by the assessing officer, the assessee preferred an appeal with the commissioners. However, the commissioner has upheld the assessment order passed by the assessing officer. Now, aggrieved by the decision of the commissioner appeals, what the assessee has done is he has preferred an appeal to the tribunal. While preferring an appeal to the tribunal, the assessee has raised additional grounds. He has questioned the validity of the assessing officer's order. He has alleged that there is a violation of standard operating procedure by NFAC. Right? Now, what has actually happened is the 148A notice should give the time limit to respond to the assessee as required by law. The law requires that 148A notice should give at least 7 days. Of course, it can be until 30 days. Thereafter, if there are valid grounds, it can be extended by an application made by the assessee that is there. But the thing is here, at least 7 days should have been given for the assessee to respond by virtue of section 148(8)(a). Now, actually, in this instant case, only 5 days was given. The notice under 148(a) was issued on 20th of March 2022, and the reply or the response time is required by 26th of March 2022. Thereby, only 5 days time was given. Now, opportunity of being heard is mandatory under the law. An opportunity must be given to the assessee sufficient time as mandated by the statute is to be given to an assessee during the assessment proceedings. But in the instant case, the proper time for the assessee is not being given to respond as mandated by law. The minimum time is 7 days, but the assessee was given only 5 days. So, to conclude, what we can say is that notice under section 148(a) is not in accordance with law. So, the order passed under section 148(a) as well as the issue of notice under section 148 as well as the order passed under section 147 are liable to be quashed, and the assessing officer is directed to take up the case afresh. But now it has been directed that the proceedings should be in accordance with law. Proper opportunity is to be given, that is, sufficient time as mandated by law should be given to the assessee to respond. And also, the assessing officer is required to decide the matter afresh, and this time it has to ensure that the law is complied with. Now, what are the key takeaways in this case law? Adherence to procedural mandates is very much crucial for the assessment proceedings, and also it is a legal necessity that adequate time for response, and that too the minimum time as prescribed by law is to be provided to the assessee to respond. And if such complaints of law is not made, the notices as well as the orders passed are liable to be quashed, as is the case in this particular case law. Thanks for watching. See you next time.